Peter, welcome. So as you discussed in earnings not too long ago, international isn't opening up for you yet, so that's a revenue headwind. And now this fuel issue continues. How are you managing through the fuel costs and how that's eating into margins?
We are seeing some opening up in international markets. Right at the tail end of last year, we started service to Australia again, which we hadn't had on our network map since March of 2020. So we are seeing some positive signs there. But Japan, which is a big part of the international tourism for Hawaii, by far the largest part, is still really not anywhere near back to normal. So we've got a lot of work to do in terms of getting the full international opening in the Pacific region. As far as fuel, obviously we're at prices a lot higher than we were a year ago. I'm not, going to try and read too much into day-by-day trading trends, but we know prices are higher. It's not at levels we haven't seen before, but ultimately, we have to make sure that we cover the costs of operating our business, and fuel is obviously one of the biggest parts of that.
Now, are you seeing travelers, your customers, willing to spend in this inflationary environment? If they're going to take that trip, are they taking it, willing to perhaps spend a bit more for the plane ticket, and is that helping?
We're seeing very good demand, especially from the U.S. mainland. Our domestic markets are recovering. As we've had cases come down from the Omicron peak here in Hawaii and elsewhere in the U.S. mainland, there's really no problem at all with demand, and I think people are willing to pay. What we can charge is, of course, a function of supply and demand, and that has to do with the overall level of capacity in the market as well.
Based on that, are you able to pass along the higher fuel costs onto your consumers because you've seen an acceleration of demand? And I guess on that same line, what are you seeing with regard to cancellations? Obviously, Omicron was a big factor for the airline industry. Have you seen kind of cancellations slow down a bit as this reacceleration of demand picks up?
Yeah, right now cancellations aren't anything outside of ordinary levels. As Omicron cases have declined, we're seeing strong bookings and we're seeing people taking their trips. So people are very comfortable traveling in the current environment.
And Peter, how much does the overall stock market matter to how wealthy people feel and how willing they are to take leisure travel, which is, of course, an important piece of the business, domestic leisure travel, as you point out, with Japan not having come back for you yet?
Yeah, I don't think the stock market in an environment like we've been in over the last little while has a big impact on people's willingness to travel. If I go back to 2008, when we saw such a much more major adjustments in the stock markets, I think at times like that, people are more concerned about their 401k. But what we've seen in the recent environment with a correction from the peak is not something that I think is going to deter people from making their plans to travel this summer. And frankly, after 2 years of less normal travel, I think many people are eager to get out and enjoy the experiences they've been missing. And we saw that last summer. I think we're going to see that this year again as we go into spring break and into summer.